Hey everybody, it's Jeff McGinnis at CrossCountry Mortgage, and welcome to the month of June. I cannot believe we are almost halfway done with this year. Personally, I'm thinking about ordering Christmas cards just to get ahead of the game. But all joking aside, I wanted to share with you what has been happening in the bond charts over the last month, share with you about what's happening with rates and some of the reasons why we saw rates a little bit higher over the last month. So I'm going to cut to the charts and share my screen here, and then we can discuss. All right, team, here's the charts I want to share with you. We're looking at the last quarter of trading, and it's interesting. 3 months ago-ish, we saw the bonds trading around the same level, and we did see some nice bouncing out, which means, and by the way, I'm going to back up a little bit. If you haven't seen me before, this chart is kind of the opposite of what you think. So up is actually really good for rates and down is bad. So when we look at this chart, we want to keep that in perspective. So green is good, red is bad, okay? So if we're looking at this chart, we're noticing that within the last month, so I'm recording this on June 1st. If we go back to May 1st, we had some really relatively elevated bond trading, which means that our rates were a little bit lower. Now, when we hit here, you'll notice that on this day, May 10th, we got some good inflation numbers, and the market responded according to what we would expect. I've been talking about inflation being an important factor and rates becoming lower, and we did get a moderately better core CPI number, which was important for our inflation to start coming down. And you can see that happened on May 10th. And then the market started to deteriorate. And the main factor, team, is that the debt ceiling issue started to arise, and it wasn't really favorable. Additionally, we did see some more inflationary concerns with the price of oil and how it reflected itself into food, into energy. And so the market began to deteriorate. And as you can see, once the debt ceiling, this was then the 26th, that was kind of the low of the bonds and the high of the rates for the last month, that once the debt ceiling talks started to loosen up a bit, we got back into what we would consider more of a normal range. So as we get this deal signed and the debt ceiling is no longer a factor, we'll kind of get back to some normal trading. And as I've been mentioning, this is not a clean experience. This is going to be a sawtoothing downward experience as we go through our inflationary numbers. And just to let you know, we've got a new core CPE number, core PCI number coming out this month as well. And I think it'll be a lot more favorable than even last month's reading. So in the month of June, we'll get that report. So June 13th is when the May of 2023 core CPI numbers will come out. So pay attention to that date, team. That'll give you some good insight as to what we'll be seeing for inflation. If you do have any questions, so to kind of wrap up, we're going to see some sawtoothing downward as predicted. We're through this debt ceiling issue, which is helpful to get back to more of a quote unquote normal trading in the bond markets and interest rates. And as we see lower inflation numbers, we'll see some lower interest rates. So if you have any questions, feel free to give me a call. If you need to talk about your situation, by all means, reach out to me. If you like what you saw and you got a little bit of insight, please like this video, subscribe to the YouTube channel, and look forward to connecting with you again soon. Have a great one. See ya. Bye-bye.